Bitcoin is knocking on $70,000 again. One specific altcoin just shot up over 25% in a single day because of a halving event almost nobody was talking about. Ethereum just unveiled a plan so ambitious it sounds like science fiction. We're talking about quantum-proof transactions and 10 million transfers per second. And a stablecoin giant may be secretly building something that could put a physical card in your wallet, one connected directly to your crypto. Plus, one publicly listed company just announced it is liquidating 7,500 Bitcoin. That's hundreds of millions of dollars hitting the market. What does that mean for price? We break it all down. I'm your host. Welcome back to Crypto Insight Hub, and this is everything you need to know about crypto today, February 26th, 2026. Stay with us until the end because the Ethereum news alone could change how you think about the next 5 years. Let's start with the headline everyone woke up to this morning. Bitcoin is back above $68,000. In fact, during overnight trading, it pushed as high as $70,000 intraday, testing that massive psychological level that traders have been watching like hawks. To put this into context, just earlier this week, Bitcoin was sitting near $63,000. That's a roughly 8 to 9% swing from the weekly low to today's peak. The total crypto market cap is now sitting at around $2.3 trillion, up about 4% in the last 24 hours. Now here's the important question everybody is asking right now. Is this a real recovery or is it just a short squeeze? The honest answer is it looks more like a technical bounce than a fundamental reversal. Analysts at LMAX Group pointed out that the move appears driven by bearish positioning being unwound and thin overnight liquidity rather than any clear catalyst like an ETF announcement or major regulatory news. When you have a market that's been beaten down for weeks and everyone is positioned short, all it takes is a small upward nudge to trigger a cascade of forced buybacks. That's a short squeeze. Looking at the data, Bitcoin's Relative Strength Index, or RSI, had dropped into oversold territory before this bounce. Now it's moved back into neutral, which typically signals consolidation is coming, rather than a straight line run higher. Futures open interest across the entire crypto market rose by about 1.5% to $93.5 billion. But importantly, analysts noted that this rise came mostly from price appreciation rather than fresh capital flowing in. In simple terms, people didn't suddenly rush in with new money. Prices went up, so the existing bets got bigger in dollar terms. Volume is another concern. The KuCoin market report noted that while Bitcoin tested 70,000, trading volume actually declined during the push, not exactly the kind of confirmation bulls want to see. So where does that leave us? Bitcoin is in a range it's been stuck in for about 3 weeks now. The short-term structure is improving, but for bulls to feel truly confident, we need to see a convincing close above 70,000 with strong volume and ideally some positive news flow backing it up. For now, cautious optimism is the right posture. While Bitcoin was doing its thing, the altcoin market absolutely woke up today. The altcoin season indicator moved back to its January high, which is significant because January was when altcoins were at their strongest relative performance this year. Let's go through the biggest movers because today is full of them. Polkadot, or DOT, is the undeniable star of the day. It surged somewhere between 25 and 28% in the last 24 hours, making it one of the biggest single-day moves of any major coin today. The reason? Polkadot announced a halving event scheduled for March 14th. Yes, Polkadot is having its own halving moment, and on top of that, the network plans to cap its total supply at 2.1 billion DOT tokens permanently. For a network that has historically been criticized for its high inflation rate, this is a massive structural shift that changes the supply dynamics entirely. Traders clearly love it. Near Protocol is another massive winner, surging approximately 22% to around $1.18.
Near's rally comes alongside a noteworthy product launch. The team announced a new privacy layer called Confidential Intents, which enables cross-chain transactions with enhanced privacy features. In a market increasingly focused on privacy and confidentiality, that's exactly the kind of narrative that gets traders excited. Ethereum is up around 9 to 10% on the day, Solana is up roughly 10%, Cardano is up nearly 10%, and Aptos and Uniswap are both posting double-digit gains as well. Even Dogecoin managed to grab almost 7% today. Centrifuge, a smaller DeFi-focused token, is sitting on a staggering 117% gain today, making it the top percentage gainer across the entire crypto market as of this morning. And XRP? XRP is up around 6 to 9%, depending on when you're reading this, trading around $1.46. We'll dedicate a full section to XRP in a moment because that story has some interesting details underneath the surface. One token worth watching is Morpho, ETHFi, and Virtual, all of which posted gains above 10%, signaling that DeFi and lending protocols are starting to see renewed interest. Capital rotation is happening in real time.
XRP has bounced, but the road back to $2 is not going to be straightforward. After touching 9% gains from yesterday's lows, XRP is now trading around $1.46. The broader market recovery gave it a lift, and for a token that has had a rough few months, any green is welcome. But analysts are watching key technical levels closely before getting too excited. The immediate target is the $1.49 to $1.52 resistance zone. This is where sellers have previously stepped in, and market analysts are calling this the critical decision point. Above 150 and XRP opens the door to 168 and eventually back to the $2 range. Below 140 and the token risks sliding back down toward 135. Analyst Crypto Insight UK specifically highlighted a daily close above $1.50 as the confirmation signal he wants to see before calling this a real trend reversal. He also noted that liquidity data suggests most of the downside has already been swept, meaning the market may have already found a near-term floor. The volume driving today's XRP move looks genuine in the sense that it doesn't show the telltale signs of manipulation like a sudden open interest spike. That's a relatively healthy sign. But XRP has teased recoveries before, and the $2 level remains a substantial distance away. Watch that 150 level closely over the next 24 to 48 hours.
This might be the most important news of the day from a long-term perspective, and honestly, it deserves its own video. But let's break it down as clearly as possible. The Ethereum Foundation just released what they're calling the Strawmap. That name is a combination of straw man and roadmap, and that framing is deliberate. This is not an official decree. It's a proposed vision, a coordination document designed to spark debate and align the Ethereum developer community around shared long-term goals. Researcher Justin Drake published it publicly after it was initially drafted at an internal Ethereum Foundation workshop back in January 2026. So what does it actually say? The Strawmap outlines 7 planned protocol upgrades, or hard forks, between now and the end of 2029, running at roughly 1 fork every 6 months. Think of it as Ethereum's master plan for the next 4 years. There are 5 core goals that anchor everything. First, dramatically faster finality. Right now, Ethereum transactions take minutes to achieve economic finality. The Strawmap targets finality in seconds, potentially as fast as 1 second, with Vitalik Buterin himself commenting that he wants to see block times shrink from 12 seconds down to 2 seconds incrementally. Second, the goal is 10,000 transactions per second on Ethereum's base layer through the integration of ZK EVMs, zero-knowledge proof systems that can verify transactions with radical efficiency. Third, at the Layer 2 level, the target is 10 million transactions per second, which would make Ethereum's combined ecosystem capable of handling truly global-scale financial activity.
Fourth, post-quantum security. This is a big one. Vitalik has previously warned that quantum computing risks could emerge as early as 2028, and the Strawmap addresses this head-on with quantum-resistant cryptography as a core protocol goal. Fifth, native privacy. Right now, Ethereum transactions are fully visible on-chain. The Strawmap envisions a future where users can make shielded ETH transfers directly at the base layer, with privacy baked in rather than bolted on as an afterthought. The upcoming forks already have some names. Glamsterdam and Hegota are the next ones on the list, with later forks using placeholder names like I-Star and J-Star. Each fork is planned to carry one major upgrade per layer to keep development moving at a sustainable pace without overwhelming the developer community. The document is available publicly at strawmap.org and will be updated at least quarterly. What does this mean for ETH holders? It means the Ethereum development machine is not slowing down. While some critics have argued that Ethereum has been losing ground to faster competitors, the Strawmap is a statement of intent. Ethereum is aiming to become a quantum-safe, ultra-fast, privacy-native financial settlement layer by the end of this decade. Whether it gets there on schedule is a fair question, but the ambition is undeniable.
This is one of those stories that's officially unconfirmed, but too interesting to ignore. Tether CEO Paolo Arduino posted a teaser video on social media featuring a metallic card icon. No caption, no explanation, just the image. The timing is notable. Tether simultaneously announced a strategic investment in WAP, a fast-growing digital marketplace with approximately 18 million users. The investment allows WAP users to spend USDT seamlessly through what Tether calls its Wallet Development Kit. The integration essentially brings stablecoin payments directly into the WAP ecosystem. Put those two things together, a card icon teaser and a major consumer marketplace investment, and market speculation is running hot that Tether may be developing a physical payment card that bridges your crypto holdings to real-world spending. Imagine a card linked to your USDT balance that works anywhere Visa or MasterCard does. That's what many people are reading into this. Tether has not officially confirmed anything, but given that the company already settled a court dispute this year and has been aggressively expanding its footprint beyond just being a stablecoin issuer, a consumer card product would fit the pattern. This is one to watch very closely in the coming weeks. Kraken Pro just made a move that could attract a new wave of institutional and advanced retail users. The exchange launched a product called Flexline, a crypto-backed borrowing facility that lets users take loans against their staked crypto holdings. Here's how it works. If you're staking assets on Kraken and you need liquidity, rather than selling your crypto and potentially triggering a taxable event, you can now borrow USDC, BTC, or other assets against your staked portfolio. The annual percentage rates range from 10% to 25%, which is competitive in the crypto lending space. The key differentiator is flexibility. The borrowed funds can be withdrawn off-platform entirely, meaning you can move the cash to a bank account or use it for real-world expenses. Or you can use it for leveraged trading directly on Kraken. That gives users a genuinely flexible off-chain liquidity solution. This kind of product has been offered by competitors before, but its arrival at Kraken signals that the exchange is doubling down on capital efficiency features to compete for high-value users. In an environment where regulations on crypto lending are still evolving, the design choice to keep things relatively straightforward may also reflect lessons learned from previous failures in the crypto lending space. Now for some news that could create some selling pressure. A US-listed company called GDC has announced it is liquidating its entire Bitcoin reserve of 7,500 BTC. At current prices around $68,000, that's approximately $510 million worth of Bitcoin hitting the market. That is not a small number.
The full details around why GDC is unwinding its position aren't entirely clear yet. This story is still developing. But the announcement comes at a delicate time for Bitcoin, which, as we discussed, is currently in the middle of a technical bounce after weeks of selling pressure. Large liquidation events like this can have complicated effects on price. In some cases, if the company is selling over the counter, meaning directly to a large buyer like an institution or a fund, it bypasses spot markets entirely and has minimal visible impact on price. In other cases, if the selling happens through exchanges, it can create noticeable downward pressure. Markets have not dramatically reacted to this news yet as of this morning, which suggests either the selling is being absorbed quietly or investors aren't too worried about the scale relative to overall market liquidity. It's something to keep a close eye on over the next 24 to 48 hours.
You might be wondering why crypto surged overnight and today. Part of the answer is Nvidia. Nvidia just reported strong quarterly earnings, blowing past expectations, with revenue in its data center and AI segments. The results sent the Nasdaq up more than 1% for a second consecutive day, and risk appetite across global markets improved meaningfully. When traditional markets are in risk-on mode, crypto often catches a bid. The correlation isn't perfect, but it's real enough that when institutions feel good about equities, they tend to be more comfortable adding or holding their crypto allocations. At the same time, gold continued trading near elevated levels around $5,200, and silver jumped about 4%, suggesting the broader move is partly speculative risk appetite, rather than a clean flight to quality. The macro environment still has headwinds. There are lingering concerns about U.S. tariff policy, ongoing U.S.-Iran geopolitical tensions, and several Federal Reserve officials have been sending hawkish signals, pushing market expectations toward fewer interest rate cuts and later timing than previously hoped. So the backdrop is equities are happy today because of Nvidia earnings, and crypto is benefiting from that lifted sentiment. But the fundamental macro conditions have not fundamentally changed. Rates are still elevated, geopolitical risk is still present, and the Fed is not rushing to cut. Keep that in mind when evaluating the durability of this rally.
A quick mention on Circle, the company behind the USDC stablecoin. Circle's stock ticker, CRCL, rallied sharply today after reporting fourth quarter 2025 revenue of $770 million, a 77% increase year over year. The resurgence of USDC usage was a central driver of that growth. This matters for the broader crypto market because USDC's rise is a positive signal for regulated stablecoin infrastructure. As more traditional finance players look for compliant on-ramps into digital assets, USDC and Circle are increasingly positioned as the institutional stablecoin of choice. Combined with the Tether card speculation and Kraken's Flexline product, today's news is painting a picture of a stablecoin ecosystem that is rapidly maturing beyond simple dollar pegs and moving toward full-stack financial infrastructure. Before we wrap up, let's end on something that has the community buzzing. A widely circulated chart analysis is making the rounds today, comparing Bitcoin's current price pattern to a historical fractal. If this fractal plays out as it has in previous cycles, the model suggests Bitcoin could be targeting at least $80,000 by September 2026. Now, fractals and technical patterns are not certainties, they're probability frameworks, and this particular call should be viewed with appropriate skepticism because chart pattern analysis has its limits. But the fact that this analysis is gaining traction tells you something about the current mood. After weeks of declining prices, the community is actively looking for evidence that the bottom is in and the next leg up is coming. The key milestones to watch are simple. Can Bitcoin close convincingly above $70,000 in the short term? If yes, the next major resistance levels open up. If Bitcoin fails to hold this current range and drops back below 63,000, the bullish fractal narrative loses credibility fast.
And that is your complete crypto news breakdown for today, February 26, 2026. Let's quickly recap the big themes. Bitcoin bounced hard to test 70,000, but volume is thin and the move looks technically driven. Polkadot is going absolutely parabolic on halving news and a supply cap announcement. Ethereum just unveiled a decade-long roadmap with goals so ambitious they include quantum-proof security and 10 million transactions per second. Tether may be about to launch a physical card that brings crypto to your wallet in a very real way. GDC is selling $500 million of Bitcoin, and that's worth tracking. And Nvidia's earnings are partly fueling today's risk appetite. It's a lot for one day, but that's the crypto market. It never sleeps and it never slows down. If you found today's video useful, please hit the like button and subscribe to Crypto Insight Hub so you never miss a daily update. Drop your thoughts in the comments. Do you think this Bitcoin rally has legs, or are we setting up for another fake out? I want to know.